Good morning and welcome to the early bird. And here we're looking at the S&P 500 on a 30-minute chart, and we can see that we're at the 1300. I don't really have any sort of good news or bad news. We just really need to see like this level here at 1300, and the same with the Dow and many other indices as well. We really need to see if these current levels are going to be accepted and develop a support or be rejected in terms of resistance and supply levels. So as you can see at the moment, it's sort of, it's reacting to this particular level. What I normally sort of wait for is a market to come down and find its first level of support where the value buyers will come in and they'll push it up, and then it will be a game of supply and demand. So the demand will obviously come in from the value buyers, so to speak, but the supply that's been moving down from higher prices that we know is here already obviously has been sort of connected here as well. So once support comes in, that will push up and the supply will come in. So it'll be a game of supply and demand in here. And this is what we really need to see, because this will tell us if we're going to see further downside or further upside here. This is this is just a normal case of approaching a large number where it has the arrival, it has its reaction, it finds support. Does it gain enough, accumulate enough energy to actually push up through here, creating the first high above the level, and then coming back and checking, resting and checking support there, and then finding support on there, and then moving off. So that would be a normal trading levels. I just call it a classic pattern because it's what normally occurs, a little bit like just here actually. So in its own little way, you see the 72 number there. The market comes up, reacts, comes back, finds support, gathers its strength, pushes up, and then comes back and checks. So basically it's really just sort of working. When you sort of take a closer look at it, it's all pretty much the same all the time. So this is the balance point through here, and it reacts, support, first high above the level, comes back and then gets support on here. So that's what we'd be looking for, this type of situation. Sure, be slightly different, but that's what we'd be sort of looking for here. If that's not the case, then it will just drop from here, but 1290 would be the first sort of port of call of any sort of support there. So we just need to allow that to sort of play out. This pattern that's coming down is not that sort of clear. It can be the beginnings of an impulse wave to the downside, or it can be corrective. So there's not a lot to sort of work out from that particular point there. And the same with the Dow Jones as well. As you can see that it's sitting quite nicely on the 12,000. The real supply and resistance comes in from the 72 to the 150 there. This does appear to be a little fourth wave correction here. So yeah, I'd expect that to push up through there, but we'll see how we go. See if it pops down through that and becomes resistance. But at this stage here, we'll have to consider that a wave 4, and we'll be looking for a wave 5 moving to the upside, but that's not done and dusted. So the other sort of little thing that we could sort of bring in is the weekly cycle, and Tuesday is normally profit taking after the Monday run, and the last Friday and the Monday run, profit taking Tuesday. Wednesday is a bit like a V-shaped day, so we'll have a softer landing in our morning session than a higher close. And then Thursday will be the bear day, and if the volume dries up on the bear side on the Thursday afternoon session, well, then we can look to scaling in on the long side, with support coming in on Friday for the Friday run, and more so the Monday run back around to Tuesday again. But in saying that, we're up against some tough supply levels up here. You've only got to go back in history to have a look at that sort of situation there. We are expecting this rally to top out a little bit. We are seeing that on our local market. If we have a look at I won't go to the SPY just yet. This is the ASX 200, just so it's got a clearer pattern here. We were looking at this being an A wave, a B wave to here, and a C wave in 5 waves, which I thought that just looking in through here, we should have had another little push in here, really, because that was the strong little third wave in the middle from here. So that sort of hasn't occurred, and coming back down overlapping here is not such a good thing. So we'll see how that goes. Any sort of overlapping or any sort of move below this 30 number here, then there's weakness in there. But you can see the 5 little wave structure in there, and I've counted those guys in there as well. So just this one here looks a bit dodgy, so I'm a bit unsure about that, but we'll sort of see how we go there. When we're looking at this market on the daily chart, this is actually the all ordinaries here, the XAO, so the prices will be slightly different, but we can see that that's been pushing up through here. Apart from that bar there, we've got diminishing volume here. So we've got the price moving up, but the volume diminishing here. So that's a sign of weakness, and we understood that on this bar here. So that weakness is sort of creeping in here. That's why a lot of the stocks today, if the Dow does close lower, it's still on the close at the moment, but if it closes lower, then a lot of this patterns here is what we're seeing in stock as well. So they would create good robo trades to the short side, because that's what it's sort of looking at here. It's showing this weakness here. But we also got to be aware that if we are in a bullish cycle, yes, we will have the Wednesday down, and we'll even have the Thursday down, but then the Friday would be up with the Monday and Tuesday. So we would have to be diligent and mindful, and Jack be nimble, Jack be quick, so to speak, So just sort of bear that in mind, and that's what we'll be sort of looking at. The FTSE's sort of showing a bit more sort of weakness than the others, which I think sort of interesting, and it's moved down because we've got this 5-wave structure coming down through here, an impulse wave in 1, 2, and this is the little 3rd wave into here with the 4th across to here, and the 5th wave down here with 5 waves in it. So we've got a 5-wave structure here. This should present an A and a B and a C wave back up here. Sure, that can be the A, B, C in here, but it just looks a little bit sort of in terms of ratio and proportions to this move here. It's just a little bit small, so it wouldn't surprise me if this corrective pattern is still unfolding, and we'll get a move back up here before we see another move down. But if this 750 here, 5750, the midpoint here becomes the resistance, then you want to trade that down to the 30. There'll be a bounce off the 30, cover it at that point there, and then sell the bounce again into the 20s. But the 30, 20, and 10 down here, we'll see that bouncing around, but work the order from there. It's the same with the SPY as well. The current situation on the SPY, a little bit like the ASX 200. This is a 1-hour chart, so it's not that clear, but you'd have to drill in here and work the orders from the 4672 here as support or resistance, and using the 65 and the 80 here as triggers to be long or short, and make sure you cover at the midpoint here. If it's dropping to the downside. That does appear to be 5 waves down here as well. Drill in there and have a look at that, and then this would either be the 61.8 retracement level, which is a bit high, but we'll see. If we got 5 waves here, then expect another 5 over here, but this could be the A, the B, and the C to here, and then down from here. But anyway, I'll have a closer look at this a bit later anyway. But yeah, yesterday we were talking about if the 47 became support, then you want to be long from that point there. But the 472 here was going to create resistance there, and it will do. But we're back at this situation where you need to work this be long or short from the 72 here. The futures markets, right. Gold. Okay, so gold, we're looking for a wave 4 pullback, and the interesting thing is that a couple of points here is the 38.2 retracement level of the 3rd wave here, 382 at the 1420 here is coming nicely. Not only that, is that we've got that nice 3-wave structure there, which is a counter bullish ABC sort of pattern, and further highs would be made off that. But as you're aware, we are dealing with this number here, the 1430, which is the top of group 1, 30, 20, and 10. So this is going to be significant here. If support is found on the 1430 this time round, then you can go long. Finding support on this 1425 is a possibility that you could scale into. Just be aware that make sure you've got good support there, simply because you've got supply levels through here and you've also got supply levels through here, so it's going to be stormy weather in this little patch here and can certainly sort of fail from that particular point there. Let's have a look at this pattern here. The pattern is a little bit corrective in terms that you see this move up through here. See how that's in 3 waves? So that's a corrective pattern to the downside, where we have 5 waves moving down here. That 1, 2, 3, 4, and 5, and there'll be 5 in here as well. So that's 5, 3, that's an ABC, and this is also an ABC in here. So not sure about this little guy here. So an A and a B and a C for the top of this correction here. So basically down for the A, cross for the B here, and we could be down for 1, back for 2, and down. So that 1, 2, that 1425 really going to come into play here, and you really need to recognize that as support or resistance. So don't jump the gun. Just allow this to be, to really develop through there on that 25. The copper market, the base metals are up last night. Nickel's down quite strongly. I'm not sure why that was the case. But here, we've still sort of got our fingers crossed for a 5-wave structure up in terms of this 1 here, this 2 here, this 3 here, then an A and a B and a C here for wave 4. So that wave 4 can be there. And then a wave 5 to push up through here. But this does appear a little bit corrective. This wave 4 here may not be finished until this is over here, and the reason that I say that for is that when we're looking at this situation here, we may have this as down for 1 here, back for 2, nice strong 3rd wave here, and then we've got an A and a B and a C wave up to here for the 4th, and then the 5th to come down to make the C wave of wave 4 here. So there's still that possibility there. So as you can see here, the 430 is also the top of group 1, and this normally, yeah, so look, we don't have support on here yet. Yes, the price is trading above, but there's no support. It hasn't retested from this point here. It's moved up, but when it comes back, it hasn't retested. So the supply, or rather the sellers from up here, could still be moving down through here. So so anyway, that's not sufficient to say it's bullish yet. It would need to have a bit of a Dow theory approach, where now that this correction, this C wave up here be finished, it needs to come back down, check the trend here, check this trend for strength, and then find support on the 430. Then I'd be sort of happy with that moving up there. I just don't like markets that come down and then have this sort of corrective pattern coming across here in any time frame, because this, as it moves across here, this is a corrective pattern moving across here. Sure, it could be a building pattern to the upside, but because of the overlapping wave structures through here, it makes it corrective. So it just, the bulls will get into a bit of a trap here. So wait for that support there. Yeah, and as you know, the 425 there is 425, 426 area here. Somebody pointed out that a move below this really sort of adds to the bearish side, and the reason it adds to the bearish side is simply because of the pattern that it creates in terms of this move up here of the next largest pattern. If this moves down through here, then it makes this here 3 waves, which is a corrective pattern, and that way we would be impulsing to the downside through here. And this is really significant because, you know, copper and base metals, you know, we are a resource state, so they impact on our dollar, our major leading stocks, as BHP and Rio can take up like 50% of the index. So, if you've got banks weak as well, then and resources, you've got a pretty quick move to the downside. So, all eyes on this here. So, but it's interesting because 430 here. This is top of Group 1 here. We were just looking at gold as well here, and that's also at the fourth. Essentially, this is a 10-minute chart. This is the 430 here as well, is what we're dealing with, and the same with oil as well in a small way at 103 here is also Group 1 as well. As you can see here, we've sort of pushed up for 5 waves to the upside here for the crude, the 1, 2, 3, 4. That 4 is probably a triangle that comes in here. I've got it as an ABC, but not that it matters that much. But it is interesting that we've got 5 waves here because something is wrong somewhere, because we've got 5 waves down through here. So one of these counts is wrong, but for the time being, as we approach the 100 here, being above the 100, we'd have to be look for long trade setups. It's just my trading level guidelines, I guess. No matter what the Elliott count is, if we're above a major level, then we need to be looking at that side of the market. So we've got nice support on top of the Group 1 here. So once you've got support here, a triple top here, as Gann would say, the 4th time that a market is tested through a triple top, it will burst through. So it's always good to watch those triple tops. But I also know that from being supported at Group 1 here, then it will reach the next level, 5 there. Markets tend to move quite quickly between 5 and 3, and also coming down this way as well, even quicker, and also 5 and 8 as well, especially coming down 8 to 5 moves. Market seems to move quickly. Market moves slowly through these levels here because the orders sitting in the market depth are closer together in terms of ratio. So anyway, expect to see a correction there. We've had 5 little waves up through there. Expect to see a correction there. If support is found on after that, then we'll move up, and we can class this as up for 1, back for 2, up for 3, a little wave 4 across here, and a wave 5 to go up. So let's just see how, see if this can be a triangle pattern here. Or it can be just the ABC here, and then up for 1 and back for 2 and up for 3, and we'll find 4th on here. But this will obviously help push. We've been talking about some of the energy stocks. However, with the local market, in the same with gold as well, we still need our share market to go up as well. So all the sort of ducks have got to be lined up. Okay. Just want to have a quick look at not so much the euro, but the Australian dollar here. We've pretty much been long in our thoughts, probably not everyone in trades, but long above 98 here. Now, the same, we're impulsing to the upside here, so there is a nice sort of movement to the upside here. It's a 15-minute chart. On the 5-minute chart here, we can see that we're starting to gain support on the 101 here. So this appears to be corrective here. And this seems to be a bit of an impulse wave up through here. So the whole thing does seem positive, and we've got sort of support on here. And the normal thing to do would be to scale in long here once support's here, and that support is just about there. And then also through the 2 as well. Once that develops support, then you'd be long on top of that. And then either get out here at the top of Group 1 and then wait for support. If support comes in, and find on this top of Group 1 here, the same as the other markets like the crude that we've just been talking about, gold's at 1430, and copper at 430. This is the same. This is Group 1 as well, but just a smaller degree. But same principles apply. There will be a corrective process across here. If support is found, then you'll get to the midpoint here. So it just depends on your trading time frame and how you go about doing that. So if if it's wrong, the way that would be wrong would be this would be down for 1, 2, 3, ABC for fourth and down for 5. This would be an A and a B and a C wave up to there somewhere, and we'll get a C wave back down to here. Now after this C wave comes here, if support is found back on after that, then you'd scale in back over here. So if you do get your wings clipped through this situation, don't give up, because we'll end up with an A and a B and a C across here, and then would go up from that point. So that's the idea of scaling in, to manage the risk, control the risk. So support on each little one here. So if you divide your trade up, into 3 or 4 parts here, and you put the first little bit in here, and the market dropped under here, then you'd be out there. But at least you've only risked like a very small proportion of it. And if this here becomes support, then you would add to that point. So it's just basically sort of being in a canoe going down the river, like sort of managing the bends and the twists of it all. So it doesn't give you the optimum outcome, but it certainly smooths the situation out in terms of money and stress. Alrighty, good morning and good luck.